So revenue and expense deferrals, or RED, the RED module, basically it simplifies deferring revenues and distributing expenses. If you think about the accrued expenses you do, any kind of prepaids, revenue where maybe you bill up front, but you need to recognize revenue monthly over a 12-month contract, that sort of thing. This revenue and expense deferral module can help automate that process for you. I know some folks save recurring batches, at the GL level or at the sales level. This could potentially replace some of those saved recurring batches and, like I said, help further automate the process for you guys. So here are the modules that work with the revenue and expense deferral module. You can defer at the GL level. You can defer at the receivables or the payables level, also on sales order, so like a sales invoice or a purchase invoice, and then as well as the invoicing module. So it's available on all of those windows. A few prerequisites before you're able to use the module. First, we have to get it installed. So it is a separate install. It comes shipped with your GP media, but sometimes doesn't get installed initially. So we would have to install it. So we install it first on the SQL Server, and then we also install it on the terminal server and or any workstations where users will be using it. Once the product is installed, there are security tasks and roles that need to be assigned to users. And then another consideration is, obviously if there are new deferred revenue or expense GL accounts, you want to get those added to your chart of accounts before we roll through, using this. So there are two methods that GP allows and we can set up as default. One is the balance sheet posting method. That is the simpler method. And then there's also the profit and loss posting method, which is a little bit more complex. We're going to look at both of those. I would say the majority of folks probably use the balance sheet posting method, but the choice is yours. And you don't have to pick one or the other. You can use, the balance sheet for some deferrals and maybe the P&L for others. So you're not locked into one or the other. So the balance sheet posting method is, like I said, simpler because there's only two GL accounts involved in the deferral. There's the deferred revenue or expense account, and then there's the recognition account, either recognized revenue or, the expense account. For the profit and loss, as I stated, that's a little bit more complex because instead of you using two accounts, now you've got 5 accounts that you would need to set up defaults for. So there's the original cost where the transaction originally hit. There's the deferred cost account. That would be your P&L account. Could be the same as number one. So you don't have to have 5 separate accounts here, but you can, have the same account in 1 or 2 of the spaces. Other setup options for the deferral module. The audit trail code obviously is grayed out at this point, but it can be changed if you wanted to. By default, it's ALTRN. So anytime you see an ALTRN transaction in GP, you'll know that it was based on the deferral module. The default calculation method In this screenshot, it's set to equal period. We will look at the options for that drop down. I think there's one that's days in the period. So instead of equal amounts per month, you can have it fluctuate based on the number of days in the month. Here are some other options you get to select. And again, these are defaults. So the first one, automatically post through GL. Usually that's nice to have checked. The next two I like because it requires less work. So auto post into closed future or previous periods. So, you know, one of the things that this does do, one of the caveats is it will post into future periods. So if your accrual is 12 months, it will go out 12 months and want to post in all those 12 periods. So with this, if you check yes on those two, it will automatically go and post into closed periods. So you don't have to go and open the periods first. We can have it post even though the periods are closed. Again, we can set our defaults for the sales and purchasing series to either the balance sheet or the profit and loss. You have the option to void deferrals with the original transaction. And do you want all users to access the deferral profiles, which again, we'll look at here in a moment. So those are some of the setup options. Obviously, you know, not a lot to set up. Once you get this window filled in, you are ready to go. So we're going to walk through a few examples in GP. We'll walk through an accrued rent payment in the payables side, and then we will also walk through an example of recognizing revenue over the course of a 12-month service contract. So obviously we'll leave our questions for the end. So without further ado, here I am in our GP demo company. We will start out on the purchasing side. So I set this up a little earlier today. It's a $12,000 invoice for the travel company. Here on the distributions, you notice I'm coding this to, if I do my expansion arrow, I'm coding it to an accrued payables account. So I'm prepaying this $12,000 expense. It's really a 12-month contract, but I'm prepaying the full amount up front. So it's going into my accrued payables account. From here on the distribution window, when we click on the additional button, this is where the deferrals come from. And so here's the deferral window. I want to pick the account. Well, let's do it this way. So in this example, I'm actually prepaying rent. I'm prepaying my rent upfront for 12 periods. So I pick my rent expense account. So right now the amount to apportion is the full $12,000. I can set the start period. So let's start this at 1/1/2027, and we'll go through the end of the year. And you notice down below it bills out the posting. So it's going to post $1,000 of expense each month across the 12-month contract. So here the method again is set to equal per period. If I change the drop down, I can change it to days in the period, And then you're going to see fluctuation based on the number of days, obviously, in each month. So some days, January, March, the days with 31 days in the month will have a higher expense than, say, February or April. So I'm going to leave it to equal per period to spread the expense out. And I'll click OK. Once I click OK, it's going to save. Then I'll click OK here and save. This is just telling me that there's an existing PO for this particular vendor. I'll just click continue. So let's go post this batch. I'm not going to print the distribution details. Let's print this one. So here, obviously, it's my first, is the original payables transaction where it's hitting the accrued. And then again, the GL where it's hitting the accrued. And now I want to print this one. And so then this is showing the general ledger posting where each month the rent expense is hitting. So there's January, February, March, all the way through to the end of the year. So obviously I did this spanning just a calendar year. Obviously you can have 2 or 3 year contracts and you can have it post out into future years. The only caveat being you have to have those years set up in the fiscal period's calendar. But you go ahead and enter it, post it, and then you're done and you don't have to think about it again versus, like I said, the recurring batches where you have to go in and actually post those each month. So that's the example on the payable side. Now let's go over to the sales side. Again, I have another example set up where this is a 12-month service contract for $120,000. I am billing the client up front, I'm invoicing them the full 12-month contract, but I want to recognize revenue incrementally each month, again, across a year. So similar to on the payable side here, it's hitting my deferred revenue account. Here again, I would go pick my service account. Again, I'm going to do equal periods. This one I will do April 1st through, so I'm doing this across 12 periods, but it's going across years. So I'm doing April 1st, 2027 through 3/31/2028. Again, if it was a 2-year contract, I'd go out, to 2029. And then again, here down below, it's splitting out based, again, equal periods because that's how I have it set up. So we will save this, and I'll just save this. The posting is going to be the same, so it will go out and post into all of my future periods. I'm going to flip for a minute to the financial page because under the setup section here, this is where we set up our deferrals. So this is the deferral window that we saw the screenshot in the PowerPoint. One thing to note is you can put warning options on the different distribution types if you want. And then the one thing we didn't talk about yet under setup is the deferral profiles. So you can set up multiple profiles, one for each module if you want, and for different distribution types. So this is where it will pull the defaults from. And like I said, you can have multiple deferral types set up profiles. So again, automating your processes so you don't have to think about it each month. That's the goal here. So are there any questions?
Hey, Diane, we do have one question here. Yvonne asks, is this compatible with GP 2016?
Yes, it is. Yeah, this has been around for, I think, quite a while. But like I said, some folks don't even know it exists because it may not have been deployed. I think at one time it was a separate module and then was purchased, and included in GP, but that's why it's a separate install activity, similar to the fixed asset module.